Want to get straight to what really matters. Without all the noise, you're definitely in the right place.
Yeah, let's dive in.
We're unpacking Tata Elxsi's latest numbers, Q4, in the full fiscal year 2025. That just ended March 31st.
And we've gone through, well, pretty much everything. The press release, investor slides, the earnings call transcript, the audited financials, all of it.
So what's the mission today?
Simple, really. We want to pull out the most important takeaways for you. How did Tata Elxsi actually perform? What strategic moves are they making? And, what does the future look like for them?
And the quick version. It seems like a strong year overall for revenue, but Q4 may be a bit bumpy in places.
That's a fair summary. Some sector challenges definitely showed up in Q4, but, and this is important, they also bagged some really big deals and are stepping into some new, pretty exciting areas.
Okay, let's get to the details then. Where should we start? The full year picture.
Sounds good. Let's look at fiscal 25 as a whole. What really stands out for you from that big picture view?
Well, hitting 3,729 crores in operating revenue, that feels like a major milestone.
It absolutely is.
That's what, 5% growth year on year, which is solid. And even if you strip out the currency effect, the constant currency number, it's still 3.1% growth. Seems pretty decent.
Decent, yes. Is a significant marker. But when you shift focus to profitability, things get a little more complex, maybe.
How so?
Well, their profit before tax, PBT, that came in at 1,028.4 crores, which is actually down slightly, 1.9% lower than the year before. And profit after tax, PT, similar story, down just under 1%, 0.9% year on year, landing at half 784.9 crores.
So revenue's up, but profit is slightly down. What's driving that, do you think? Investment?
That's likely a big part of it. The management commentary later points to increased focus on new areas like aerospace, AI, so it suggests they're investing now, possibly impacting current profits slightly for future growth. It's a strategic trade-off.
Right, investing for the longer term. Makes sense. And what about margins for the full year?
Still quite healthy. The EBITDA margin was 26.1%, PBT margin 26.3%. So the core business profitability is still strong.
And they didn't forget the shareholders either. There's a dividend recommendation.
Yep, a final dividend proposed, 75 per share. That's a solid return for investors.
Okay, so full year, good revenue growth, slight dip in profit, likely due to investment, but still healthy margins and a nice dividend. Now let's zoom into that fourth quarter you mentioned was a bit bumpy.
Exactly. Q4 FY25. This is where that mixed picture really comes into focus.
So Q4 operating revenue, 908.3 crores. That's barely up year on year, just 0.3%.
Right.
And compared to the previous quarter, Q3, it's actually down, 3.3% down sequentially.
And the constant currency numbers paint an even starker picture for Q4, down 2.9% year on year and down 5.3% compared to Q3. So definitely a slowdown in those last 3 months.
But did that slowdown hit the bottom line too? Profitability in Q4?
It did, yeah. PBT for the quarter was 221.4 crores. That's a pretty significant drop, 15.6% down compared to Q4 last year.
Wow. Okay.
And it was also down 13.4% from Q3. Pat followed suit, down 12.4% year on year and 13.4% quarter on quarter, ending up at 172.4 crores.
And margins presumably took a hit as well?
They did. Margin compression in Q4. EBITDA margin dipped to 22.9%, and the PBT margin was 23.3%.
Okay, so the full year masks a bit of a tough final quarter. Let's try and understand why. Digging into the different business segments should help, right?
Absolutely. That's the best way to see what's going on under the hood. Where should we start? Healthcare.
Yeah, let's do healthcare and life sciences. How did they fare?
Actually, quite well in Q4. They saw healthy growth, 3.5% quarter on quarter in constant currency.
So that was a bright spot then.
Definitely. And for the whole year, they added 13 new major clients in healthcare. They're really pushing digital product engineering, AI, and diagnostics. Seems like a strong growth engine for them.
Good to hear. Okay, what about automotive, or transportation as they call it? You mentioned headwinds earlier.
Yeah, this is where some of those Q4 challenges really surface. It seems some big clients, OEMs and suppliers, hit pause on starting new projects.
Likely that global uncertainty factor kicking in. Geopolitics, market jitters.
That's what they indicated, yes. And some projects that were already won took longer to ramp up than expected. They think that ramp up will resume properly in Q1 of the new fiscal year, FY26.
Right. Those delays can hurt in the short term. But it wasn't all bad news in auto, was it? I remember seeing some big deal announcements.
Exactly. Despite the near-term issues, they landed a huge multi-year deal. $50 million. focused on software-defined vehicles, SDVs, with a big European OEM.
50 million, wow. SDD is basically making cars more software-driven, right?
Precisely. And on top of that, another major deal with a different European OEM, setting up a global engineering center focused on SDV, electrification, the works.
So current bumps in the road for automotive, but they're laying some serious track for the future with these wins. Interesting contrast. What about media and communications?
Similar story in a way. They face some headwinds there too in Q4. Things like clients going through mergers or restructuring, which can disrupt projects,
Makes sense.
and just generally more cautious R&D spending across the media and telco industries.
Right. Belt-tightening in the current climate.
Yeah.
But again,
Hmm.
any big wins to offset that?
Oh, yeah. A massive one, actually. Their single largest deal ever. Over $100 million US. It's for product engineering consolidation.
Over $100 million. That's huge for them.
It is. And they also snagged a $10 million deal with a global broadcaster, helping build out their streaming platform.
So again, navigating immediate issues, securing major long-term business. It really is a recurring theme.
Yeah.
Okay, what's the last main segment? Systems integration and support.
Yeah, and this one's interesting because they're kind of pivoting strategically, moving away from maybe more basic support towards higher value-added services.
Like what?
Things like creating sophisticated experience centers.
Right.
A really high-profile example is their work on the Bharat Pavilion, the India Pavilion, for the World Expo 2025 in Japan.
Ah, okay. So less about just keeping things running, more about showcase projects and innovation.
Exactly. Leveraging their design and tech skills for more unique, possibly higher margin work. It's about differentiation.
Makes sense. So beyond these segments, the company itself is making some big strategic shifts, isn't it? I saw mentions of new sectors.
Absolutely. The big one is a strategic push into aerospace and defense.
Right.
They're looking at space tech, UAVs, drones, essentially software-defined systems in defense, and supporting India's push for, make in India, or indigenization in defense.
That feels like a significant diversification. Are they just dipping their toes in?
Doesn't look like it.
Yeah.
They've already got partnerships going with NAL, Garuda Aerospace. They're getting impaneled with key defense players. It seems like a serious long-term move.
Very interesting. What else on the strategic front? Tech investments.
Huge focus there, especially on digital AI and specifically generative AI across all their business lines.
Are they training their people for this?
They say over 70% of their talent is now AI ready, and they've got a core team of over 500 AI specialists. So yeah, a major push to future-proof the workforce.
That's a big number. And their innovation isn't just code, right? I saw something about design awards.
You did. They won prestigious IF Design Awards, one for GameSense, which is about improving fan engagement in sports through user experience,
Right.
and another for the actual physical product design of a racing simulator wheel for Turtle Beach. So it shows their strength in both UX and industrial design. It's good external validation.
Definitely. It's always good to get that kind of recognition. Now, something that's becoming critical for everyone is sustainability. Are they focused on that?
Very much so. They have clear targets for their own operations.
Right.
Zero waste to landfill by 2025, carbon neutral by 2030, and net zero emissions by 2045. Plus, they're working with clients on sustainability too, things like product lifecycle efficiency, supply chain traceability.
That covers the environmental side. What about social responsibility?
They highlighted that too. Initiatives in healthcare, education, environment. Mentioning they reached over 75,000 patients and supported over 7,500 students. Adds that corporate values dimension.
Okay, so a lot happening strategically. Let's bring it back to the outlook. What was the vibe from management? From the CEO, Manoj Raghavan, and the earnings call?
The overall tone was, I'd say, cautiously optimistic for the next fiscal year, FY26. Confident, really.
Based on what?
Primarily those large deal wins we talked about. They see huge potential in scaling those contracts up. That's expected to drive momentum.
So they expect growth to pick up again after that Q4 slowdown.
Yes. They said they expect to grow from the Q4 FY25 levels and have, quote, decent visibility for growth starting in Q1 FY26.
Any specific areas they called out for growth?
Healthcare was mentioned specifically as likely to continue its strong performance. And geographically, they see India and other emerging markets as important growth drivers.
And the focus internally?
Scaling those big deals efficiently. And mining them, meaning finding more opportunities within those large client relationships. And crucially, getting margins back up.
Yes. The margins dipped in Q4. They think they can recover those.
They express confidence that as revenue growth picks up, the margins will improve again. That scale should bring efficiencies.
Makes sense. Okay, but it can't all be smooth sailing. What challenges or risks do they acknowledge?
Well, they didn't shy away from the fact that those geopolitical and market uncertainties are still out there, particularly impacting automotive clients.
Right, that hasn't gone away.
And the client-specific issues in media and communications are also still a factor they're navigating. Oh, and they did mention employee utilization was a bit lower in Q4, around 70%.
Meaning they had some people on the bench, potentially?
Potentially, or just not fully build on projects. It's something to watch, but likely improves if growth picks up as they expect.
Got it. One last detail, the geographical mix of their revenue. Any
Mhm.
shifts there?
Yes, actually. Over the full year FY25, the share of revenue from the US decreased a bit.
Oh, where did it shift to?
India and the rest of the world categories saw their contributions increase. It looks like a deliberate move to de-risk, spread their geographic exposure.
Strategic diversification.
Yeah.
Makes sense. Okay, let's try and wrap this up. After digging through all this, what are the main things that stick out? The key takeaways?
I think, first off, Tata Elxsi showed real resilience over the full year. Strong revenue growth, navigating challenges. Second, those big strategic deal wins, especially in auto and media, are crucial for future growth despite the Q4 headwinds in those sectors.
Right.
Third, the clear strategic push into new areas like aerospace and defense is significant. And finally, that underlying investment in AI, sustainability, and design really positions them for the future.
So for everyone listening, hopefully this deep dive gives you a much clearer picture of Tata Elxsi, not just the numbers, but the strategy and direction too, where they've been this past year, and perhaps more importantly, where they seem to be heading.
Yeah, exactly. And maybe a final thought to leave you with. We've talked about their move into aerospace and defense, dealing with global uncertainties. It makes you wonder, doesn't it? What other emerging sectors, maybe ones we haven't even discussed today, could be the next big growth engine for a company like Tata Elxsi? Something to ponder,